Redbox family, what we're looking at here is the 1-year chart of Redbox. I want to go over the indicators that I'm going to use in this chart to explain to you why I am still bullish, incredibly bullish on this play, and that has not changed. So the indicators that I use when I'm looking at a 1-year chart are generally the 13, 48, and 100 and 200-day moving averages. I added in the 10-day moving average because I think that it's important in this example for you to just see on a smaller scale. And the channel that we were kind of trapped between at the end of the day yesterday, kind of between that 10 and the 13. It's not as easy to see looking at it this way, but that's the issue that we were dealing with. I also always have on the RSI and the MACD. So when you're looking at the MACD, if we go back, you can see when we have the spike initially that went up to 27, you see the red cross over the green on the MACD as it's going up. When we go into a sell territory, we're signaled by the fact that the red crosses under the green on the MACD, and you can follow it on the chart moving as well until we get right here in January. You see once again that we get a buy signal. Fortunately, it goes up short term and sells off very quickly. Again, the red crosses under the green. That's your sell signal. When the red crosses back above the green, all this way, since middle of February, this is a buy zone. Lines are very, very close here. Different people that are swing traders play this a different way because you do get the cross, but as you can see, it doesn't open up. So technically you get a sell signal here, and then you get a buy signal here. I've talked to different people, and a lot of people will exit as soon as it gets out, but some, when it's very close and hugging, it can be a false breakdown, which is what we got here, in my opinion. And some people will stay in. Again, I'm not telling anybody how to trade. I'm just trying to show you how to use these tools so that you understand why I am still bullish on Redbox, because it is definitely a technical setup. And as you can see from what I'm pointing out, it has been for quite some time. Back in April, once again, we saw this zone where they're pretty close together. So there's trying to make a decision here. It's a point of indecisiveness. Then mid-April, you get the cross above the green again. And as you can see in the price action on the chart, we're going up. Then you get a sell signal right here, which drop in price. Again, you get the buy signal. The red's crossing above the green. Back down. No sell signal. All the way from the buy signal triggered here, when we're in that $5 range until now. As you can see, it's not abnormal that it can start to curl down a little bit and still kind of come closer together and then go right back up. Guys, that is the MACD, and that is a bullish indicator at the moment. We do need to keep an eye on the curling down. We want to make sure that it does not cross under the green. If it crosses under, that creates a sell signal. Okay, we have our RSI, and anything below 30 right here, this means that it's a good time to stock up and start buying. Anything that goes above 70 is when people start to say, okay, this is getting overbought. Time to consider selling. Okay, so right here you see it went up, people started selling. We've held above 50, guys. Holding above 50 is still very, very bullish because it needs to cool off. Look, all this time, you're going to see it go up and down, up and down, up and down. Here, when we have this run, you see it spiked above, it went down, came back above, went down. Here's where you got your sell signal on that second touch. I'm anticipating something similar happening here. I mean, there's no guarantees, but also you can see here, you got the touch above. A lot of people are going to come out of their trade and sell. Again, get up above, gets down, tries to go back up again, touches, and then the sell signals generated on the MACD. We have to use these tools in conjunction to what we're seeing on the chart. So again, going back to my moving averages, I use SMA, guys. Simple moving average, you're putting it in. Other people use EMA. I personally just find SMA to be more accurate. So this big red line here, as you can see, is our 200-day moving average. So over the last 200 days, this is where the average was, following this line, $7.11. Currently, well, this is the close number, 1009, because we're looking at a daily candlestick. But currently, the price, let me look at the chart, I think it dipped into the 9, right at, is 954. Okay, guys? Right now, we're still holding above that 10-day moving average. That's bullish. We're holding above right here, my 13. The green line is the 13, the yellow line's the 10. Both of those lines a couple days ago crossed above the 200-day moving average. That is a very bullish indicator. At that same time, we have the 100-day moving average in orange here. And then this pinkish line, purplish line, is my 48-day moving average. You often hear me talk about the 1348 crossover, which happened right here when the stock was $2, and I told you guys. Getting the 1348 crossover on the daily chart, 1348, this is huge. I mean, 1348 on the daily chart normally is when you start to see moves like this. When I'm calling out plays during the days, guys, I'm looking at things that, you know, are entries for day trading. Not that I'm day trading red box. I am not. I could be, but I'm not. I am long and I'm very bullish on red box. But on the daily chart, I use the 1348 as an indicator. So when you hear me saying that, because I'm looking at a short term, and I'm looking for a short-term move when I'm calling out those plays. When I'm looking at the daily chart, this is for a swing play setup. This is for a setup that is going to say, I'm going to bank on this. When you get that crossover, generally, it's a buy. To me, it's a buy, and it does well. And on the larger time frame, like the daily chart, to see that indicator is huge. Now, this 13 comes back and crosses under the 48 at $5.27. Then we got a little problem here, and you need to get out, in my opinion. That you do what you want to do. It's your money. This isn't financial advice. I'm just telling you how I trade. To be honest with you, if we get below $7.11, these start to go under, that would be a very bearish indicator for me, and I would exit my trade at that point. Okay, guys, we've ridden this up since $2, or many of us. I mean, I've been calling it out since, Lord knows. I've noticed the manipulation back here in October. Here, before this, I was in all of this, guys. Do you know that they still couldn't get people to sell in here at the 27? They had trouble getting shares, so what did they do? They reversed it. They tried to run it up again. Yeah. In hindsight, I initially think I told you all I was in this play for a long-term play because I actually believed, based on the investor presentation, that Redbox could, if they had the right management and the right people in, could be a competitor to Netflix. I don't look at red box as a stupid little red box that you see in a convenience store. No offense, red box, but it's outdated. We know this. Nobody in this play is in this because they think that little DVD kiosk, which was an excellent thing to have in its day, but it's obsolete. There's streaming. Everybody has streaming now, and they no longer use this. But guys, this chart basically has been bearish when it crossed under all the way back here in December. Okay, it was bearish until it reached this point here in April, and nothing's changed since. The play just got better, and as you're seeing here, it's moving up still because you're getting that 48. So people that trade with maybe 20, 50, 100, 200 moving averages might call this a 50, 48, 50. It's when you draw it out, guys, there's not much difference. So however you decide your trading skills is, this line crossing over the 48 SMA, or if you use the 50 crossing above the 100, again, these are called golden crosses. When you get lower moving averages moving above higher moving averages, and they are bullish. You heard me talk about the death cross. That would be if these start falling under these moving averages. And the death cross on a daily chart is far different than a death cross on a yearly chart. And I did tell everybody that there was a death cross on that daily chart. So that was the only bearish indicator that I saw. And perhaps we all should have gotten out at that point. Hindsight's always 20/20. But this play, in my opinion, based on where we sit right now, is far from over, guys. This is an excellent technical setup still, and it's still moving in the right direction. As you can see here, look at these curves. Higher high. Higher low. Here's your first low. Here's your next low. This one doesn't exactly get higher, so not necessarily a higher high there. It's starting to go down a little bit, and as you can see, it got close to being a time to say, all right, get out. But it didn't. It didn't say get out. What did it do? It went on to make a higher high, and it went on. So far, we've made a higher low. Guys, time to make another higher high. We may have a couple days of chop in here. I wouldn't be surprised, but I think we make another higher high. I don't think this play is done. But again, this is what I'm going to be watching, and this is how I'm going to be making my decision. Looking at the big picture, because I still believe that this has the potential, number one, for us to gap fill from this, $13 mark to, this is probably about $13.80. I'd have to look at the daily candlestick to see exactly where we got that gap. There's still that gap fill. And 9 times out of 10, probably 99 times out of 100, that gets filled. Now, just to give you a heads up, we still have a gap fill right here. It came down, but there's probably a few cents that still didn't get filled. So we may come down and test this. And that would still keep us, believe it or not, right at the 13-day moving average. Or right around it. It might give you that fake breakdown, and boom, right back up. That's how I see it. That's my technical analysis on the big picture of Redbox and why I am still in this play. Guys, this is not financial advice. It's not meant to be construed as that. This is just to show you where I'm coming from and to try to give you a little bit of understanding of technical analysis. So when you see me calling things out, you understand what it is that I'm looking at. Again, this is my thesis for why we're in an uptrend, and this is bullish. Granted, on the daily, we fell yesterday to a downtrend, but on the yearly, we are still in an uptrend. And when you're looking at charting, you need to zoom out and look at the bigger pictures and the bigger time frames. That's all I got for now. I hope you all have an awesome day, and we're going to kill it. I still believe that.